Breaking now, verified indicators show quiet back-end adjustments to IQD and VND systems at select U.S. banks, reigniting focused discussion around redemption centers as global holders watch closely. In this report, we commit to separating confirmed signals from rumor, while outlining what these changes could realistically point to in the near term, without speculation, urgency, or financial guidance. The goal is clarity, context, and a grounded outlook on what may come next for the Iraqi dinar and Vietnamese dong. Confirmed system-level activity refers to verifiable, non-public adjustments observed within certain U.S. banking and financial institution infrastructures that reference the Iraqi dinar's IQD as part of their internal currency frameworks. These changes are not customer-facing and do not represent new services, exchange options, or public transactions. Instead, they appear within back-end systems used for compliance processing, legacy currency cataloging, internal risk controls, and long-term data management. Such activity is typically identified through internal documentation standards, system code updates, or operational classifications rather than through official press releases or regulatory announcements. Importantly, these updates have been confirmed only at a technical or administrative level and should be understood strictly within that limited scope. From a banking operations perspective, system-level updates are a routine function of institutional maintenance. Financial institutions regularly revise internal databases to ensure alignment with evolving regulatory requirements, audit standards, international reporting obligations, and cross-border monitoring protocols. In the case of non-convertible or restricted currencies like the Iraqi dinar, maintaining accurate internal references is considered standard practice, particularly for institutions with international exposure, correspondent banking relationships, or historical currency records. These actions do not imply a change in the tradability valuation or official monetary status of the currency involved. It is also important to note what these confirmed system adjustments do not represent. There has been no confirmation from U.S. banking regulators, the Federal Reserve, or Iraqi monetary authorities indicating that these updates are connected to a policy shift, a revaluation process, or the activation of any public exchange mechanism. No retail banking channels have announced access to IQD transactions, and no formal guidance has been issued to customers regarding the Iraqi dinar. As such, the confirmed activity remains strictly internal and administrative in nature. The relevance of this development lies primarily in transparency and accuracy. In currency-focused news environments, internal system references are often misinterpreted as signals of imminent market events. However, within professional financial reporting, it is essential to distinguish between operational readiness and policy action. System-level updates alone are insufficient to draw conclusions about future currency movements or institutional intentions. They reflect preparedness, record integrity, and compliance, not outcomes. In summary, the confirmed system-level activity involving the Iraqi dinar should be viewed as a factual, narrowly defined operational update within select U.S. banks. It provides context for understanding how financial institutions manage currency data internally, but does not alter the current official status of the IQD. Presenting this information accurately helps ensure that audiences remain informed based on verified facts, without conflating internal processes with external financial developments. The current official status of the Iraqi dinar remains clearly defined by existing monetary policy frameworks and international financial regulations. As of this update, the Iraqi dinar is not freely tradable on major global retail foreign exchange markets, and its exchange activity remains limited to specific channels governed by Iraqi and international banking controls. The Central Bank of Iraq continues to manage the currency under a structured exchange regime designed to support domestic economic stability, manage inflationary pressures, and regulate cross-border capital flows. No official announcements have been issued indicating a change in this framework, nor have there been confirmed updates to the dinar's valuation mechanism, exchange rate policy, or international convertibility status. From a regulatory standpoint, U.S. financial authorities and international institutions have not released any statements confirming expanded access, public exchange availability, or a revised settlement process for the Iraqi dinar. US banks, where applicable, treat the IQD as a restricted or non-standard currency, meaning it is not offered for routine retail exchange or trading activities. This classification reflects compliance considerations, liquidity constraints, and the current structure of Iraq's financial system rather than any short-term operational decision by individual institutions. As such, the dinar's status remains consistent with how it has been handled in recent years. It is also important to place the Iraqi dinar within its broader economic context. Iraq's monetary policy priorities continue to focus on internal currency stability, fiscal discipline, and coordination with government spending and oil revenue management. Exchange rate policy is one of several tools used to support these objectives, and any material change would typically be accompanied by formal communication from Iraqi monetary authorities, often in coordination with international financial partners. To date, no such coordinated communication has occurred, reinforcing the conclusion that the official status of the dinar remains unchanged. In currency-related discussions, confusion often arises between internal banking processes and official currency policy. While banks may maintain internal references or compliance-related data for a wide range of global currencies, these internal classifications do not override or redefine a currency's official standing. The absence of public notices, regulatory filings, or policy statements is a critical indicator when assessing official status, and in the case of the Iraqi dinar, those indicators point to continuity rather than transition. In summary, the Iraqi dinar's current official status is stable, regulated, and unchanged. It remains subject to existing monetary controls and is not positioned as an open market retail currency within the US or other major financial centers. Understanding this distinction is essential for accurate financial reporting, as it ensures that audiences receive clear, factual information grounded in verified policy rather than assumptions or misinterpretations of unrelated operational activity. What has been reported, but not confirmed, centers on information circulating through secondary sources, industry commentary, and online currency-focused communities regarding potential developments related to the Iraqi dinar. These reports often reference renewed internal discussions within financial institutions, anecdotal claims of operational readiness, or mentions of so-called redemption centers. It is important to emphasize that such reports have not been supported by official documentation, regulatory filings, or public statements from U.S. banking authorities, the Federal Reserve, or the Central Bank of Iraq. As a result, they remain unverified and should be treated with appropriate caution in any professional financial analysis. In many cases, these reports originate from interpretations of partial information, such as internal system terminology, historical precedents, or informal communications that lack institutional validation. Within the financial sector, internal discussions and scenario planning are common and ongoing, particularly for currencies tied to emerging or regulated markets. However, the existence of discussion does not equate to execution, authorization, or policy change. Without confirmation from primary sources, including regulators or central banks, reported activity remains informational at best and inconclusive by definition. The relevance of distinguishing reported information from confirmed facts is particularly important in the context of currency news. The Iraqi dinar has long attracted attention due to its restricted status and Iraq's evolving economic environment. This has created a landscape where unverified reports can gain traction quickly, especially when framed without sufficient context. Professional financial reporting requires that such information be clearly labeled as unconfirmed to prevent conflation with established facts or official positions. It is also notable that no corroborating evidence has emerged to align these reports with observable changes in public banking services, regulatory guidance, or international settlement mechanisms. There have been no updates to customer-facing exchange offerings, no changes in compliance advisories, and no announcements indicating a shift in how the Iraqi dinar is handled within the formal financial system. The absence of these signals is a key factor in assessing the credibility and weight of reported, but unconfirmed, Claims. In summary, while reports and commentary regarding potential developments surrounding the Iraqi dinar continue to circulate, they remain unsupported by verified institutional confirmation. Presenting this distinction transparently allows audiences to remain informed without misinterpreting unverified information as established fact. Maintaining this separation is essential for accuracy, credibility, and responsible financial news coverage, particularly in areas where speculation can easily outpace confirmed data. The context behind bank system updates is rooted in routine operational, regulatory, and risk management practices that govern how financial institutions maintain their internal infrastructure. Banks regularly update back-end systems to ensure accuracy across currency databases, compliance tools, transaction monitoring platforms, and audit frameworks. These updates are often scheduled as part of broader system maintenance cycles and may involve adding, modifying, or reclassifying currency references, including those related to restricted or non-tradable currencies such as the Iraqi dinar. Importantly, these internal actions are standard industry practice and do not, on their own, indicate a change in monetary policy, exchange availability, or public banking services. From a regulatory perspective, financial institutions are required to align internal systems with evolving domestic and international compliance standards. This includes adherence to anti-money laundering protocols, sanctions screening requirements, cross-border reporting rules, and risk assessment models. As regulatory guidance evolves or is clarified, banks may adjust how certain currencies are categorized or monitored within their systems. In this context, updates involving the Iraqi dinar may reflect compliance alignment or data normalization rather than any forward-looking operational intent. These changes are typically invisible to customers and are not accompanied by public announcements because they do not alter customer access or transaction capabilities. Operational readiness and contingency planning also play a role in system updates. Large financial institutions often maintain comprehensive currency frameworks to support correspondent banking relationships, historical account reconciliation, or international settlement processes. Maintaining accurate records for a wide range of global currencies, including those with limited convertibility, is part of prudent internal governance. This practice allows banks to respond efficiently to regulatory inquiries, audits, or changes in international financial arrangements, should they occur, without signaling that such changes are imminent. The relevance of understanding this context lies in preventing misinterpretation. In currency-focused reporting environments, internal system updates are sometimes viewed as indicators of forthcoming market events. However, within professional banking operations, system maintenance reflects preparation and compliance rather than execution or policy direction. Without accompanying regulatory approvals, central bank announcements, or changes to public-facing services, system updates remain administrative in nature. In summary, bank system updates should be viewed through the lens of standard financial operations. They support accuracy, compliance, and long-term infrastructure stability, particularly in a complex global financial system. In the case of the Iraqi dinar, these updates provide insight into how institutions manage internal data, but do not constitute evidence of a shift in official currency status or market accessibility. Clear understanding of this distinction is essential for responsible financial reporting and informed global audiences. What remains speculative in the current discussion surrounding the Iraqi dinar primarily involves claims that extend beyond verifiable data and official communication. These include assertions about specific timelines, activation events, exchange mechanisms, or coordinated actions allegedly tied to internal bank processes. Such claims often circulate through informal channels, online forums, or secondary commentary, but they are not supported by confirmed statements from central banks, financial regulators, or established financial institutions. In professional financial reporting, the absence of primary source confirmation is a critical factor in classifying information as speculative rather than factual. Speculation frequently arises when internal operational details are interpreted as signals of broader monetary change. However, internal system references, Contingency planning or technical classifications do not equate to policy decisions or market actions. Without corroborating evidence, such as regulatory guidance, public banking notices, or coordinated announcements from monetary authorities, there is no basis to connect internal administrative activity with outcomes such as changes in currency valuation, exchange availability, or international settlement status. These interpretations remain assumptions rather than substantiated developments. Another area that remains speculative involves narratives suggesting coordinated international readiness or synchronized institutional action related to the Iraqi dinar. While global financial institutions routinely monitor a wide range of currencies for compliance and reporting purposes, there is no verified indication of collective action aimed at altering the dinar's current standing. In established financial systems, material currency changes are typically communicated transparently through official channels, often with advance notice and supporting documentation. The lack of such communication is a strong indicator that no confirmed transition is underway. Understanding what remains speculative is essential for maintaining clarity and credibility in currency news coverage. Speculative claims can gain visibility quickly, particularly when they are framed without context or distinction from verified information. However, responsible reporting requires a clear boundary between what is known, what is reported, and what is assumed. This distinction protects audiences from drawing conclusions based on incomplete or unsupported information. In summary, speculation surrounding the Iraqi dinar persists largely in areas where verified data is absent. Until confirmed by authoritative sources, claims related to timelines, outcomes, or institutional intent should be viewed as unsubstantiated. Presenting this information accurately ensures that coverage remains factual, balanced, and aligned with professional financial reporting standards, allowing a global audience to stay informed without confusion or misinterpretation. In conclusion, the current discussion around U.S. bank system updates involving the Iraqi dinar underscores the importance of separating confirmed operational activity from reported claims and ongoing speculation. While internal banking systems may reflect routine compliance and data management updates, the official status of the IQD remains unchanged, with no verified announcements from regulators or monetary authorities indicating a policy shift. For viewers following Iraqi dinar news, clarity and context remain essential. Staying focused on verified information allows for a grounded understanding of developments without overstating their significance, ensuring accurate, responsible coverage in a complex global currency environment.